NVIDIA reports May 20th, and the entire AI trade is holding its breath for one number, plus 4 more stories moving the tape today. Let's get into it. NVIDIA reports fiscal first quarter results after the close on May 20th, the most anticipated print of the season. Consensus calls for earnings of $1.08 share on revenue near $78.75 billion, up from 96 cents and $4 billion a year ago. Data center alone is projected at $72.85 billion, nearly double year over year. This is a market-wide barometer. Blackwell ramp commentary, gross margin durability, and Rubin guidance will move the entire AI complex. The bear case is real. Jensen Huang concedes NVIDIA's China share has dropped to 0 as Beijing pivots to domestic chips, and the stock is priced for flawless execution. Here's the forward signal. If data center guidance lands above $72.85 billion with margins intact, expect a broad AI rally. Come in light, and every circular financing skeptic, more on that shortly, gets louder. May 20th is the whole trade. OpenAI shipped GPT 5.5, its most capable model yet, posting 82.7% on Terminal Bench 2.0 and 10 on OSWorld-Verified. New state-of-the-art on agentic coding and computer use. It runs on NVIDIA's GB200 NVL72 systems, and that detail matters. Every OpenAI capability jump is also an NVIDIA demand signal, feeding directly into the May 20th print. OpenAI is consolidating ChatGPT, Codex, and its developer API into one super app team, folding in the Atlas browser. And since Microsoft exclusivity ended April 27th, OpenAI now sells through AWS and Google Cloud too. The bear case, frontier benchmark leads are proving transient. Rivals close the gap in months, not years, while multi-cloud distribution pressures pricing power. The forward signal. Watch enterprise agentic coding adoption. If terminal bench gains convert to paid Codex seats this quarter, the moat is real. If not, it's a leaderboard trophy. Anthropic is in talks to raise roughly $50 billion at a $900 billion to $1 trillion valuation, vaulting it into the same tier as OpenAI and cementing a 2-horse frontier lab race. Alongside the raise, Anthropic unveiled Claude Mythos Preview, tuned to find software security flaws, launched a gated cybersecurity program called Project Glasswing, and signed a $200 million Gates Foundation partnership. Why it matters. A year ago, the frontier was crowded. Now capital is consolidating into 2 names, and that scarcity is what justifies trillion-dollar marks. The bear case is the math. A near trillion-dollar valuation on a company still burning billions annually implies a revenue multiple that only works if enterprise adoption compounds for years uninterrupted. The forward signal, watch who anchors this round. NVIDIA already holds an Anthropic stake. If it leads again, the circular financing debate moves front and center. NVIDIA has crossed $40 billion in AI equity commitments this year, anchored by a record $30 billion investment in OpenAI, its single largest bet ever, plus stakes in Anthropic and xAI, which merged with SpaceX in February. The strategy makes NVIDIA both supplier and shareholder across the entire AI stack, accretive to demand and to its own equity book. But this is the circular financing question we flagged earlier. NVIDIA invests in the labs buy NVIDIA GPUs, and that revenue funds the next investment. The bear case is blunt. Critics call it a self-reinforcing money loop that inflates demand without proportional end-market revenue. The forward signal lands. May 20th. If data center growth is broad-based across cloud and enterprise, rather than concentrated in NVIDIA's own portfolio companies, the loop thesis weakens. If it's concentrated, expect the skeptics to own the narrative into summer. Microsoft detailed Fairwater, its Mount Pleasant, Wisconsin facility. 315 acres, 1.2 million square feet, hundreds of thousands of NVIDIA GB200 and GB300 GPUs, claiming 10 times the performance of today's fastest supercomputer. It anchors Microsoft's $190 billion fiscal 2026 capex and a record $6 billion in commercial remaining performance obligations. Contracted future revenue, giving Microsoft multi-year AI visibility well above peers. Note the through line. Those hundreds of thousands of GB200s are NVIDIA order flow landing in the May 20th data center number. The bear case, $190 billion in capex carries a brutal depreciation drag, and RPO is a backlog, not recognized revenue. If Azure AI consumption lags the build, free cash flow compresses hard. The forward signal: watch the Azure AI growth rate against capex intensity next print. Above 35% growth justifies the spend. Below, the ROI clock starts ticking loudly. The through line today: every story, GPT 5.5, Anthropic's $1 trillion raise, the Fairwater build, flows back to one number on May 20th. NVIDIA's print tells us whether this is a supercycle or a money loop. Subscribe to the Daily Alpha so you're ready when it drops.